Oracles. Well, what can we expect from Tesla stock tomorrow? So, here in the US, we had our Labor Day weekend. It was a long weekend, so the markets were not open today. But we got some great news on Friday. Well, from a bull perspective, we saw some great news. We got the Model 3 refresh that came out. We got some significant price cuts on the Model S and the Model X. We got a price cut on FSD. The market did not like that and sold off. Subsequently, we ended up seeing some news that we had some massive orders coming in over in China for this new Model 3. We also got information that the lead time on the Model Y long range has gone from 2 to 6 weeks to 6 to 8 weeks. That also shows some growing demand over there. So with these two pieces of news, is that going to be enough to move the stock price tomorrow? Well, we will get into all of that in just a minute. All right, so the first place we're going to look, which might give us a little inclination as to what we might be able to expect tomorrow, are some of the European markets. So because it's not Labor Day in other countries, these markets were open. So over in Frankfurt, the stock price ended up 1.41% today. In London, we saw the price up 0.81%. And so could this be the inclination that maybe we see a move up in the stock price tomorrow? So some thoughts are, the market is still trying to digest the price cuts that Tesla took last week versus these orders that are coming in over in China. So who truly knows what's actually going to happen? We are in a new month. So we did have just one day of trading into the new month last week. Now we're kind of getting into the full swing of things. So we'll see how the market reacts. Judging by the charts, we are out of this downward trend as we have discussed. We started breaking out of that. And we did make a higher low than we did previously, so this could be the start of an upward trend. So even if we come down a little bit tomorrow, might not be bad, but we'll pay attention to see what moves forward here. But we are looking like we are on an upward trend, and again, looking market wide at the S&P, the Nasdaq, everything seems like it's moving upwards from here. So based upon charts and technicals, we are most likely going to be going up. So the next thing to be paying attention to is going to be the macro environment. So the macro environment, again, this is the month we are going to get the next FOMC meeting. We have the CPI and PPI data coming out next week. So we probably won't see any indications this week as far as what the market is anticipating for it. But at the end of this week and beginning of next week, we are going to be getting the forecast for these numbers. This, again, is another data point that the Fed is going to be looking for as to whether they're going to be raising rates or not. Based upon the softening jobs market and some little notes that we're seeing from the housing market potentially softening as well, this could be an indication that the Fed is actually going to pause. Now, when we had Adam on here back in March, we did discuss how historically, when the Fed pauses, we rally to all-time highs in the markets. There have been discussions of that. The S&P could get to 6,100 from where it is now. That is a massive gain from where we're at. Is it going to get there? Do not know. So we have to pay attention to that. Again, there's a lot of data points we need to go through before then. But if the Fed has officially paused and we're going to rally to all-time highs, we could have a very strong finish to the year. Now, the next piece we discuss after that is after we rally to all-time highs, historically, something happens in the market that causes us to really turn the corner and come down. At that point, the Fed does a little bit of a scramble and pivots to try and counteract what is happening in the macro environment. So is that going to happen this time? Don't truly know. Again, we've looked at the M1 and M2 money supplies significantly higher than they have ever been. A lot of that does need to get flushed out of the market, around $5 to $6 trillion worth to be exact. So if we're looking at those numbers and we flush that out, that was the same number of dollars that came out of the market back during the housing crisis. Now, we do have significantly more money in the market now, so percentage-wise, that wouldn't feel as hard as it did for the housing market. Again, these are just some rough numbers that I've looked at with some charts, so maybe this doesn't happen at all, but looking at what could potentially happen next year as we're getting to what the Fed is trying to do of a soft landing, we'll see if that actually happens or if we actually do get into a recession. We are looking at a point right now when it comes to consumer spending. They're still spending a lot of money out there. However, we also have credit card debt getting to all-time highs, loans getting to all-time highs. So with both of those going on, we also have student loans are going to be kicking back in next month. This month here in September, interest started accumulating again on those student loans. Next month, people will have to start paying those back. So that there could be a significant amount of money that people are no longer able to put into the market to spend in other areas or do anything with because they now have to pay back these debts. Now, some other numbers we got out from Tesla are the wholesale numbers coming out of China. These are local sales and exports. So Roland Percher here with his charts. Love his charts. If you guys do not follow him on X, please do. He follows significant amounts of countries around the world and all of their growth in sales. I will show those in a minute. So coming out of China, their wholesale number was 84,159 for August. And so looking at the chart, that is not the best month that they have ever had, but we have to remember that they had the Model 3 line down for quite a bit. So they were trying to push out a lot of the older Model 3s before they officially announced the refreshed Highland Model 3. So now, seeing that we are hearing numbers about 30 to 60,000 pre-orders coming in already for them. And now what's important to note is when we got the S and the X refresh, we know that those lines went down, and Elon looks back and wishes they hadn't done it that way. So they did it much differently here for the Model 3. And the concern is, well, with all these new orders coming in, can production keep up? Well, Wang next door here posts out, I got some data today. As we know, the open interests in the new Model 3 has skyrocketed across China, so does the production side of things. It looks like we are going to ramp up very quickly to reach over 80% of where the old Model 3 monthly production number was in September and October. We will be at least 120 to 150% in November and after. We are looking at a very strong finish for both 3 and Y by the end of 2023. Very bullish. So this goes back to Elon stating that they knew that production was going to be down for Q3 just because they knew that they were going to have some of these lines down for a multitude of reasons, for retooling, and obviously now the Model 3 refresh. So going into Q4, we could be seeing some massive numbers coming out of China for the Model 3, and the Model Y is also going to be increasing. Now with the demand coming up for sales, that could be a very strong finish to the year, as Wang is saying. And now again, going back over to Roland, again, if you guys don't follow him, I'm not going to go over every single country here, but Romania is up, Switzerland is up, Belgium is up, Israel is up. And as he says here, so far about half of the countries from which we have Tesla sales data for August are looking like new record quarters. France, Italy, Spain, Portugal, Austria, Romania, and Romania is already with just the July data. There is massive growth for Tesla all over the world. So we are seeing some massive numbers coming in everywhere with this growth. And now Gary Black had posted out some very interesting information. Despite all the talk that high interest rates are hurting US auto sales, US August SAAR, seasonally adjusted selling rate, was 17% higher this year than it was last August, 15.4 million versus 13.2 million. Consumers are still buying cars and trucks despite much higher payments. And so looking at the charts, I mean, it's just almost straight up since February. Now, one of my thoughts with this as well was when it comes to other automotive makers here in the US, they had a struggle when it came to actually supplying. So perhaps there's just more supply right now and people have no choice but to buy. And it's not like they can go out and buy used cars because even the used car market was hot and they were scooping all of those up because these dealerships needed something to sell. So they were taking whatever they could from consumers as used cars and selling those also. So I don't know that correlation there, but it is interesting to see that people were not afraid to spend money and take on these big loans. Now, when you start looking down the road and you look at the consumer spending, loans that are going up, student loans that people have to pay again, that is now going to go on top of these auto loans that people are taking on at perhaps 6 or 7% interest. So people now, as consumers, are taking on bigger and bigger debts with higher interest behind them as well. So now there's a lot of consumers that are out there that are taking on bigger loans with higher interest rates, be it mortgages, which we have been seeing still going high because the housing market hasn't cooled off yet. We have auto loans here with Gary showing in the US that people are still taking those loans on. So when you start looking further out down the road and all of this consumer debt that people are taking on with high interest rates, it's very similar to when you look at large companies that are taking on the similar problem. And if they're not profitable, these companies end up going under because they can't pay the interest on these loans. That is what we call a zombie company, is a company that cannot pay just the interest itself on the loans that they are taking. So whether this comes down to a similar situation with consumers or not has yet to be seen going down the road. But something may end up cracking, and that may end up causing this domino effect to happen. We still have to wait and see how that plays out. But as far as what we're looking at for tomorrow for Tesla stock, looks like there's a lot of great information out there. Might see a little bit of a pop, but because there's such a balance of it, maybe we see something similar here that we saw over in Europe, and maybe we get a 1% gain out of the day for Tesla tomorrow, and maybe we end up swinging a bit in the day just because we're coming back after a long weekend, but we may end up only finishing up about 1%. That's going to be my guess right now. You guys can let us know in the comments below what you think is going to happen with the stock price tomorrow. But otherwise, that was awesome news to see. Again, looking long-term from a long-term investor's standpoint, this is very good news across the board. So again, this is good news that they're coming down on prices, that is allowing them to take on more market share, and competition is afraid to drop the prices themselves. Renault said themselves that they cannot do that. They just physically can't compete with Tesla there, so they are not going to be lowering prices. Other companies are, and they're willing to take a bigger hit and make less money on their EVs just because they need to make sure that they put vehicles on the roads as well. So again, Tesla's still leading the way, Tesla dominating all the way through this. We will see what happens in the future. Thank you guys so much for watching. I appreciate all of your support. Have a great one.